We did an EIA update on Spar as a result of the news flow for the last basically couple of weeks. Essentially, the latest news flow that came out sort of towards the end of the week before last was three major issues that came out of the company. Number one is that allegations of board composition. Then there is a couple of issues that are from various Spar franchisees. One is a grouping of sort of 46 franchise stores owned by three brothers who are talking about fictitious and fraudulent accounts. And then the third allegation is one of discrimination against certain franchisees that are black franchisees and Indian franchisees, from my understanding. Where we've seen the companies come out and reacted as follows. It has Mr. O'Connor has stepped down. He was the former CEO up until a couple of years ago. He has been on the board since 2021. He stepped down as chairman. He obviously does business with Spar. I think that is a positive that they reacted immediately. It is somewhat surprising that it has achieved or garnered so much commentary, given the fact that he's been there since 2021 and shareholders haven't moaned about it before. In the event, he has stepped down. Number two is the one I highlighted in red, the one that I'm slightly more concerned about. And the company has admitted that there could have been an isolated incident on this issue, which is obviously never good news. And that's certainly something that we're hoping to see them clear up quite carefully. They have allocated a legal firm to investigate this issue. And we hope that, unlike most other companies that don't hide behind the law and refuse to disclose it, we're hoping they disclose it, because given the share price performance, I think they need to. The third one is the allegation of discrimination. Very hard to pinpoint/prove, but I think the business model of Spar is such that you're always going to get these kind of issues. You've got a wholesale organization that then does business with a bunch of retailers that are independently owned. As we've gone through post-COVID, there's been some tough trading environments. So clearly there's a number of people that are unhappy about their relevant business performances, and this creates an environment for disputes. This is clearly what we've seen in the public domain, is that a couple of franchisees have taken this opportunity to air it in the public domain. Doesn't mean it's a bad thing, just simply means that they're trying to get they're basically trying to greenmail the company into paying them off to shut up. I think that's a little bit odious, but not unsurprising. So that's what's happened. One of the three is resolved. The second one we're concerned about. And the third one is something that I think is just going to be normal business practice, i.e. not normal business practice, but there's always going to be differences of view when money is involved. So if we have a look at the impact, what are we doing at this point in time? So number one, I would highlight that in the house view equity, we have 2% of Spar. So it is a very small position. It is interesting to me that it has gained an incredible amount of debate. I'm far more interested in what's happened to Naspers in the gold sector than Spar, given they are much bigger components of the alpha performance that we're looking for. But nonetheless, Spar has been an underperformer, but it is 2% of the portfolio. So what are we doing for now? For now, we are holding on, and we're holding on for the reasons that we show you on the screen. Number one, economics, it's still a sort of inflationary environment, so Spar is still a defensive counter. As we move towards inflation coming down, and consumer discretionary stocks being more interested, that is something that we will think about it. But for now, that's a sector view. For number two, the momentum price is very poor, but the momentum earnings has actually become a lot more positive. So essentially what that is telling us is that the analyst community is becoming a little bit more positive on the earnings expectations for Spar, which gives us a bit of pause for thought. In terms of the valuation, which is the second main reason why we're holding on to it, it's essentially trading at a 30% discount to its average, but it's trading at a 50% discount to its peers. So valuation alone is never a perfect reason to hold on to something. But if we sit where we are right now, it is quite difficult to throw the baby out with the bathwater and compound an error of an underperforming stock by getting rid of it now when it is extremely cheap relative to its history and relative to its peer group.
Thank you very much for joining us today.